In this video, we will teach you basic chart patterns. Chart formations can assist traders in spotting conditions where the market is ready to break out. They can also indicate whether the price will continue in its current direction or reverse. Let's start with double top and double bottom patterns. Double top is mainly a reversal pattern following an uptrend. They usually follow form when a price hits a certain level which is hard to break. The price tries to break the strong level once, then comes back and attempts for the second time, and the second try again unsuccessful. Following the same reversal, we wait for the neckline to be broken and expect another drop, which might be equal to the distance line between neckline and the tops. Just like double top, we have a neckline, two bottoms and a reversal expectation, or looking for a double bottom. Head and shoulders. Head and shoulders are also classified in trend reversal patterns. It is simply formed by a peak, which is the left shoulder, followed by a higher peak, which is the head, and lastly another lower peak, which is the right shoulder. The neckline this time is drawn by connecting the lowest points of the formation. This time we assume that the entering point to the trade is where the neckline is broken, and point the target level is the distance between head and neckline. If we reverse the picture, all will be the same for inverse head and shoulders pattern. This pattern will represent a reversal of the downtrend and signal the upcoming uptrend, or at last a bullish attempt. Triangles. Sometimes the market can become quiet when waiting for data releases or during a season. During this time, when liquidity is lower, volatility can be lower as well, which can result in less movement on the chart. This can cause a figure on the charts, as seen below, which looks like a triangle. If we have higher lows and lower highs, it means neither buyers nor sellers pushing the price far enough to make a clear trend. When we see a symmetric triangle, we expect existing trend goes on after the breakout price moves on its way. Our target now is going to be equivalent to the distance between the widest parts of the triangle. Sometimes we notice that the triangle shape has been pushed by a resistance level on top and we have higher lows. This means buyers are losing strength slowly and resistance does not let the price break out upwards. We call those patterns ascending triangles. Unlike ascending triangles, when we notice a descending triangle, we expect reversal to be formed upwards.